The Calgary real estate market has softened, yet pricing is still increasing. Is this a new normal that Calgary is experiencing? Are we in a bubble? What's going to happen in 2024? My name's Fyfe. I'm a Calgary real estate agent. I try every single month to break these reports down the best I can to help prepare you for a buy, a sell, or an invest. I've been doing this for about 2 years straight. Calgary's gone through a wild roller coaster, and this month is really no different. So let's start to dive into it. Now, the Calgary Real Estate Board writes these really good written descriptions about what's going on in that market. So if you want to read it on your own, pause the video, give it a read, skip to the next chapter, or listen to my storytelling. Increased listings, strong sales, and price growth can basically sum up Calgary's real estate market for November. New listings in November reached 2,227 units, nearly 40% higher than exceptionally low levels reported last year at this time. Gains in new listings occurred across most price ranges, but the most significant gains occurred for homes priced over $600,000. Despite the year-over-year jump in new listings, inventory levels remained low thanks to relatively strong sales. With 1,787 sales in November, the sales to new listings ratio remained high at 80%, and the months of supply remained low, which is below 2 months. Like other large cities, new listings have been increasing. However, in Calgary, the gains have not been enough to make the low inventory situation, or make changes to the low inventory situation thanks to strong demand. Our market continues to favor the seller, driving further price growth. As of November, the benchmark price was $572,700. Up over last month and nearly 11% higher than November 2022. Year to date, the average benchmark price has risen by over 5%. Now, I'm going to dive into a lot of these things in more detail, but I can agree with this. Even in my own personal experience, there has been a lot of demand, more or less in the lower price points, in the more affordable price points. I have lost out on multiple offer situations, and I've witnessed a lot of multiple offer situations in November alone. So you would think that we're going into the winter months, as this chart here indicates, that things will slow down. Like you look at the green bar, which is the sales, and the inventory, and you can see them both falling relatively at the same pace. You can see that the inventory and the sales gap is starting to get large, which is good. That means that hopefully the home prices don't increase as much as the gap is bigger. With enough inventory left over at the end of the month, that just means that the competition is slowly fading. But the price point for this past month has actually increased. So even though the inventory has decreased and the sales have decreased, there's still so much demand for that current product that pricing has increased. This does not mean that every single property sector has increased, but the overall average for the entire city has ticked up ever so slightly. Now, let's remember that there is benchmark attributes for every single property. The total residential is this attributes here, and every single quadrant, every single property type will have different attributes for the benchmark price. So when we start to look at sales, we want to see what's going on in the entire city. This is a year-to-date graph just to showcase where we're at on an annual basis. So you can see that 2021 and 2022 were fairly similar to this year. If we start to look at the actual breakdown, you can see that the blue bar is actually decreased ever so slightly from the last 2 years, and the green bar has actually increased. So it's actually switched from more detached sales to more apartment sales. Now, when we start to look at the new listing side of things, again, this is year to date, so everything up to this date, you can see that we've actually fallen down to more of a 10-year average. You can see that 2013, 15, 17, 18 roughly had around the same amount of homes currently being put up for sale. But obviously the sales have outweighed a lot of those years. When we look at the sales by price point for November, this is just an interesting piece. You can see that the $200,000 to $300,000 price point saw the most, and then the $300,000 to $400,000, and then the $500,000 to $600,000, and then the $700,000, $800,000, $900,000 is actually three $100,000 segments all morphed into one bar. So it's a little bit deceiving because you see $700,000 like, oh, that's actually relatively high, but you got to remember it's actually adding in all three of those 300,000 segments, 7 to 1 million. So for the most part, you can see affordable product in Calgary is obviously going to be the most active. This is quite interesting here, so we're only going to look at the last 4 months. I'm not going to get into this in too much detail, but just more of like a comparison from last year. So you can see that starting in basically August, that the price point is 570, 570, and 571. So the price point has relatively stabilized for the total benchmark price in all of Calgary. Now, when you start to look at things from last year, you can see just how different there are for the new listings, for the sales, for the inventory levels. Pretty crazy to see. I also want to touch on the average price point. So a lot of people ask like why I don't touch on median, why I don't touch on average. It's because they fluctuate so much. You can see that the average has relatively stayed flat. The median has moved up and down a little bit, but for the most part, I like to concentrate on benchmark because the benchmark price actually has attributes put into place. So with that being said, the entire city's inventory is down. Similar to last year, which was obviously a very hot year, but we are trending along the downwards trend, I guess you could say, when it comes to that. So when you're going into the market, it is very important to realize that there's a little amount of inventory. So when you do find a property that you like, it's very important that you stay competitive. There's a lot of times that I've worked with clients that don't fully understand that yet, and that's fine. It's a learning curve, but when you do see a property that you do like, even if you think you're going to be the only one, there's a high likelihood that there's going to be 2 or 3 other offers on that one property. It's crazy. So in an attempt to break it down a little bit more, this is the quadrants of Calgary, total residential price points. You can see that the Northwest 615, East is still at 403, South is 551, and Calgary West is 691. Just as an example, that's total residential, so that's all property types all morphed into one stat. You can see that every quadrant is still somewhat trending up minus the South. The Calgary South. You can see that the arrow is slightly pointing down, indicating that it's more of a stabilized market than anything else. Now, let's break it down into property types. I'm trying to smack through this really quick because these are longer videos and I do want to get out as much information as possible. So look at the total residential price point, 572, 700,000, up almost 11% year over year. Look at that chart, that's gone up. Month over month, relatively flat, $1,100 increase, but year over year, we're up about $52,000 total residential. So all property types morphed into one. Detached, not quite at 700,000. I'm not going to be shocked if we see a bump up into 700,000. I'm pretty confident that December is still going to be quite busy. So I would not be a bit surprised if the detached market in Calgary hits $700,000 for the first time in its history. Month over month 19, year over year $80,000. Semi-detached, you can see a month over month of literally $0, and then year over year about 66,000. Rows up quite a bit. This has probably been the hottest property sector in the entire city. It's up over 430,000. I remember when it broke 400 and I was pretty blown away, and we're almost at 450 now. It's up almost $4,000 month over month, which is the biggest increase across the whole city, as well as year over year up almost $70,000. And for a townhouse that only cost $430,000, $70,000 increase is a massive, massive increase. Apartments have also been very, very active. You can see that they're up about $3,500 or $43,000 year over year. So pretty crazy stuff. Now, if you want to read what the Calgary Real Estate Board has written about these property types, go ahead, pause the video, give yourself a read. Like I've mentioned before, if you are interested in getting into the market next year, buyer, seller, investor, whatever it is, it's so important to know this information. It might not be the most favorable information for you, but being educated will help you make decisions during the negotiation process, which will hopefully benefit you. So really diving into these numbers is so important. Now, in an attempt to kind of break it down a little bit more, I'm kind of shifting up the market reports here. This is in months of supply. Now, this is basically how fast homes in those respected quadrants would sell if no more new homes came on the market and no more new buyers came to the market. Just the basic activity that's currently in place right now, how fast would things move? So purple is always the most, is the highest. So you can see that city center, both detached and semi-detached, are around 3 months of supply. Fairly balanced market. You shouldn't see prices fluctuate too much when you get 3 to 4 months of supply. On the other side of the scale, you can see that apartments in East Calgary are under 0.5, which is a very, very active market. There is a lot of people looking for apartments in East Calgary right now. Or there's just not a lot of activity, so there's not a lot of new listings, and there's not a lot of new sales. So obviously they're going to go very, very fast because it's not a very large quadrant compared to other places. On average, you're looking around just over 1 month of supply, about a month and a half if you look at all the black bars, which indicate the entire property type. So if this is interesting to you and you want to know how this activity has affected your home value, go ahead and put your address in here. Thank you so much to everyone that's done this already. I haven't reached out to half of you. I do want to introduce myself. Call, thank you so much for using the system, and hopefully you get some value from it. If you are curious, it's an AI generated software, instantaneous home value. It is a very slick machine, really good for investors, really good for people that are just trying to figure out what their property could sell for in this market. They don't have to, but if they want to know, it is very, very interesting. So moving along, this is the microeconomic breakdown of the entire city. So I'm not going to dive into this too much because this is a very detailed document, and I'm going to touch on every single property type over the next week. So detached, apartments, semis, and rows. So make sure to keep out for those property type videos. Not a whole lot that I want to highlight here. You can see that every single property type really only increased by about a percent point, which is not that much. Semi-detached literally increased by 0%, so all of the plus and minuses actually equal themselves out. The only really big movements in this entire thing were detached homes in east, as well as the apartments in both southeast and east. You can see that the semi-detached in east, as well as the townhouses in east and northwest. They all saw the biggest increases. There are some negative percentages in there, but not one of them is like negative 1%. They're all below 1%. So it's basically balanced in my opinion. So where's Calgary going? If you actually look at this chart, it's kind of interesting. If you look at the last 5 Christmases, right, you can see some sort of flat line. It even dipped in the last 2 years. And then in January, February, it actually took off. I am pretty confident that this 2024, we're probably going to take off again. If interest rates continue to fall, which they are, then I would imagine that Calgary is going to get even more attention, as the property values are going to be a little bit lower compared to some of the other major metropolitan cities like Toronto, Vancouver. So I think 2004 is going to be another busy year. Where's it going to end? I'm not sure. We just have to watch these reports every single month. I have some ideas, but at the same time, I like to have those conversations one-on-one with people. So if you have any questions, don't hesitate to reach out. I promise I'm pretty easy to talk to. Calgary's going through a wild roller coaster right now. I don't think we're seeing any slowdown anytime soon yet. So thank you very much for supporting the channel. Make sure to give it a comment down below, say that you've made it. I really appreciate all my supporters here. If you have any questions about the report, go ahead, reach out to me. If you want the actual report itself, there will be a link in the description. Go ahead, download the PDF, read the entire PDF, and then reach out to me and ask questions, right? That's what I'm here for. So thank you very much. We'll see you on the next one. Peace.